what really surprised me was the actions of the BIS, the Bank of International Settlements, and the way that they, in essence, pulled what I would classify as espionage, pulled a move right out of a James Bond movie. This is espionage, as far as I'm concerned. This is crystallizing the reason the BRICS don't trust the West. This is crystallizing the reasoning that the BRICS are now accumulating gold and silver in a very opaque manner, not reporting it to the IMF, buying gold and silver through proxy banks.
Hello and welcome back to Soar Financially. My name is Kai Hoffman. I'm the Ed J.R. mining guy over on X, and of course, your host of this channel. And I'm especially happy to be the host for this conversation. We're welcoming back our good friend Andy Schectman. He's the president over at Miles Franklin, and Andy's been a guest on this channel a few times now, but it's been a while. It's been July. We saw each other in Boca Raton at the Rick Rule Symposium, and a lot has happened since then. This is part of our Outlook 2025 series, so of course, we're going to recap 2024. What were some outstanding trends? What were some calls that Andy made? A couple things, developments that we need to check up on. Project Enbridge is one, Fed announcements, Fed policy is the other. And then, of course, we have to look out to 2025. Tariffs, inflation, gold and silver price environment, of course, as well. I don't think we'll run out of topics here within the next 40 minutes with Andy, and it's going to be compact, dense, and hopefully very educational. Before I switch over to my guest, hit that like and subscribe button. Helps us out tremendously, and it's a free way to support us. You don't have to send us any money to watch this video. Just hit that like and subscribe button. We do appreciate it. Now, Andy, without much further ado, it is great to welcome you back here on the channel. It's good to see you again, my friend.
Good to see you, brother. Yeah, 40 minutes. We may run out of time before we run out of topics. So.
Yeah, I keep saying 40 minutes, and in the end, it's 50, 55. Maybe, like I just recorded with Alasdair Macleod an hour and 3. So maybe I need to work on my time management skills, but I'm German, so I'm not sure what I can improve here. So, Andy, again, lots to talk about. Let's start maybe with a bit of an icebreaker, and maybe a trend in 2024 that surprised you, or an event that surprised you, to the positive, to the upside, to the downside. Anything that stood out in 2024 that you say, oh, that was something I didn't expect?
Yeah, I think the BRICS meeting and the developments at the BRICS meeting stood out to me as something I didn't expect, and what happened with Enbridge. I mean, there's a lot that's happened over the years that none of us foresaw or expected. I think we've been living in bizarro world, Kai, for lack of a better explanation. So many things that we've seen just simply defy explanation. But in particular, what really surprised me was the actions of the BIS, the Bank of International Settlements, and the way that they, in essence, pulled what I would classify as espionage, pulled a move right out of a James Bond movie. Now, we've talked a lot about Enbridge and the BRICS, and that's been a central thesis of mine for quite some time. So let me explain. You know, it's very interesting because during the meeting in St. Petersburg, I believe it wasn't St. Petersburg,
Kazan.
It was Novigrad, pardon me. Novigrad prior to Kazan. Novigrad was a meeting that was coinciding with the G7 meeting in Italy. And what came out of that meeting was that the former president of Brazil, Dilma Rousseff, the head of the BRICS New Development Bank, came out and said, we have agreed in principle to a new settlement currency called the unit. It will be 40% gold backed. It will be traded over Project Enbridge. And in principle, we have agreed to it. Now, this was setting the stage for the meeting in Kazan. And Project Enbridge was the vehicle. Project Enbridge, we've talked about for going on 2 years now, a cross-border payment program that was designed and invented and developed by China, Hong Kong, primarily Chinese software, Chinese development, Chinese technology, along with Thailand and the United Arab Emirates. It was an encouraging sign for those who are following the BRICS to see Saudi Arabia join as a fifth full participant prior to the meeting in Kazan. And so you had these 5 players, the original 4, all of it being administered by or helped along with by the Bank of International Settlements Innovation Hub. Now, I was giving an interview, and I always thought about that. It kind of just went right over my head. I would think about it, and well, after all, the BIS reclassified gold as the world's only other tier 1 reserve asset. So maybe the BIS is in this for other reasons. And I was doing an interview with Michelle McCory, who always asked very challenging questions. And she says, but Andy, isn't the BIS a Western institution? And I'm thinking, ding, 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 ding. Yeah, why didn't I really focus on this for a moment? We were going back and forth over plausible explanations of what this could mean. And maybe the BIS wanted just to run be on top of a digital platform instead of having a one world currency. They could have a one world system where they are controlling not only any aspirations that the US have through Project Agora or Project Cedar, that the Federal Reserve would have on a digital payment system, but also being involved in the BRICS system through Enbridge. And so they had their fingers in all of the pies. But that wasn't right, because at the 12th hour, you have Augustus Carstens, who is a man that looks like a grown-up version of Augustus from Willy Wonka. And he's on his way out, and he's the managing director of the Bank of International Settlements. I think his term expires in June. And he came out and said, listen, this is right in the midst of the meeting in Kazan. He says, listen, I just want it to be known that the BIS cannot support any country or platform that is being sanctioned by the West. And because Russia is, well, we're going to have to pull the plug on Enbridge. Now, it's as if Augustus just realized for the first time that Russia is the R in BRICS after spending nearly 4 years helping them design this. And then right at the 12th hour pulls the plug on them. Now, this is espionage as far as I'm concerned. This is crystallizing the reason the BRICS don't trust the West. This is crystallizing the reasoning that the BRICS are now accumulating gold and silver in a very opaque manner, not reporting it to the IMF, buying gold and silver through proxy banks that don't have the obligation to report to the IMF, having the PLA, the People's Liberation Army, buy instead of the PBOC, so it's not reported to the IMF. Or just as we've discovered recently through interviews I've done with mining executives, that China, who is the second largest producer of silver in the world, as an example, are flying all around the world buying both gold and silver as the largest producer of gold in the world as well. Doré and concentrate. Doré are crudely refined bars that the miners will fashion before sending them in for full refining. And concentrate is the sludge byproduct of it all, paying close to double what the West will and sending it back home for refining because it disintermediates the market. It keeps the official numbers in the dark, and it doesn't reflect on price. So when we talk about Enbridge, when we talk about the fact that the former president of Brazil and the head of the new development bank said, yes, we've agreed to this in principle, and they were just in essence about ready to roll this out. It's already operational. It has been for over a year, and the BIS to do this is, to me, the height of underhandedness. It's dirty. And I think it will only crystallize the resolve that these countries have to not only join together in a common theme, finding safety in numbers, but also to remind them that the West is probably not to be trusted in the expansion of their endeavors. So yes, it's a disappointment for the BRICS countries, but I think it's also an indictment to the Western system that has betrayed the trust of those countries. And once you step out on a relationship, once you do something like this, trust is a very difficult thing to ever recapture. I don't think it was a smart move, personally.
Yeah, no, it's an interesting topic that I follow on the periphery. Whenever a headline pops up, I read about it because I find it interesting. As you said, it's almost like a James Bond novel. And Carstens had one quote, and he was speaking during a press conference and at an international banking conference, and he said, "Oh, we're leaving not because of a failure and not because of political considerations." I wish I could have seen his face when he made that statement. He was like,
right.
wink, wink.
Yeah, right.
So it is a level where at a level where partners can carry it on by themselves. But it feels like maybe we can comment on that a little further, because the BRICS don't seem united. And that's me, the Westerner, looking into the BRICS. It seems like India, Brazil, China, and Russia, to a degree, all have different agendas in the BRICS. Is that what's killing the viability of a Project Enbridge and the unit?
No, I don't think so at all, because the unit is not a common currency. The unit is a common settlement currency, and there's a big difference, right? It's not a common BRICS currency. It's Enbridge was the vehicle to let all of these countries trade their local currencies, their own individual central bank digital currencies. So, they could all have their own monetary policy. It could remain autonomous from a central currency, and that they would use Enbridge to settle commerce, to settle trade. And I think it's not that they're not united. I think my enemy's enemy is my friend, and I think, quite frankly, in many ways they are united. I think where it appears that they aren't united is in the fact that you can't cross that Rubicon until you have everything in order. And it's India and Saudi Arabia and Brazil maybe playing both sides, staying friendly with the West. I don't think it behooves them to burn those bridges at all. And yet at the same time, you can see that, look at the amount of gold and silver that India is accumulating, massive, massive, massive amounts. That I think signals not only their understanding of where this ultimately goes as a prerequisite for being in the BRICS, but also, I think it doesn't speak well for their desire to continue to use the dollar the way that they always have. It speaks to de-dollarization. It speaks to lack of trust to the system, and it speaks to I think the willingness to move towards a new system without being overt in saying so. It allows them to straddle the line, if you will. So I think they're more united than people would actually think. But it's important characteristic, Kai, to understand that they were never talking about a common BRICS currency. That could be a decade out. They are talking about a common settlement currency that allows them to settle transactions, in particular for commodities, for energy, outside the dollar. And instead of accumulating treasuries, in fact, they are letting them roll off their balance sheets and shedding them and accumulating commodities in their place. So to me, their actions betray any type of rhetoric or sentiment or outward facing opinions that those may have about their allegiance to the whole BRICS system. So I think in a perfect world, they would like to see it work, but it doesn't do them any good to cross that line until everything is in order, or they're only cutting off their nose to spite their face with the West.
Well, whatever they're doing, it seems to be impacting the U.S. and the U.S. Politicians' mindsets. Because Donald Trump came out threatening tariffs on BRICS countries when they started talking about new currency and settlement currencies again. So they must be ruffling feathers in Washington, D.C., 100%. De-dollarization is a trend. We spoke a lot about this summer. It sort of died down over the last 6 months, I'd say. More or less, it hasn't been mainstream media topic anymore. Although, I was a bit surprised that the mainstream even picked up on it in the first place, I have to say. But what do you make of that? Is the West really taking it serious now, threatening tariffs and really putting it on the radar screen? Maybe we can use the BIS pulling out of Enbridge as a first sign of intervention in the de-dollarization process. Is that something you're? You know what I was I'm trying to.
You're spot on, brother, as always, and you're very well read, and I like the question, but it's not a tariff. What he's doing is sanctioning, masquerading as a tariff. A tariff is to protect domestic manufacturing. Not only do we not have any, that's not what he's doing. He's threatening. And 100% tariff on BRICS, this is a very blunt instrument that would risk, in my opinion, significant both economic and political fallout. It may be a short-term show of strength, but the consequences on the long end, to me, likely outweigh any benefits. And I think it's impractical. I think it's counterproductive. I think diplomacy and strategic alliances and targeted economic measures, not broad economic measures, are typically a far more economic way to address these challenges. I think it undermines the confidence in this country as a reliable trading partner. I think it prompts BRICS and other countries to accelerate their efforts to de-dollarize, but to do so in a far less than transparent manner, which I think they will continue to do. And look, not only that, these tariffs amount to, Kai, a tax on imported goods, and the American consumer and businesses would bear the brunt of it. Not only that, the BRICS countries are massive and very significant suppliers of critical goods, energy, raw materials, electronics, pharmaceuticals. And disruptions in these supply chains will massively drive up costs. You're already seeing Xi Jinping do just that, not send certain forms of rare earth minerals that are used in strategic applications to the U.S. So I don't agree with what President-elect Trump is doing. I'm thrilled that he's coming into office on every level, but I don't agree with this. And after 4 years of action that I think has done more to destroy the United States and its reputation than any external foe ever could have, that being the policies by the current administration, I think an olive branch would be far better to extend than the stick. And I don't agree with it. And I do think it will only accelerate their desire quietly. And that's why you're not hearing much about it. I think they tried that route. Let's assimilate. In fact, it was interesting when you look at the notes that came out of the meeting in Kazan, that they wanted to be part of the United Nations, be part of the WHO, be part of the BIS and the IMF. And that kind of caught me as a little strange. They wanted to assimilate. They said, we don't want to disrupt and upend the new system. We want it to be amended. We want a new Bretton Woods. We want our side of the table to have, the same type of benefits that your side of the table has. We don't want to throw the table up, but we want to reshuffle the deck, so to speak. And then this happens. And I think they said, screw it. We're on it on our own. And yes, it may be a more challenging path, but it hasn't changed the ultimate goal of where they intend to go. And this is a very significant subsection of the world to not underestimate. They already have a larger portion of GDP. They have a larger portion of human population. Another 40 plus countries have formally expressed interest in joining. It's growing. And so, yes, it may not be as straightforward as it was under the Biden administration, and certainly would have been under the Harris administration. But I do think that regardless, this is a trend that you will not see end. It will just continue to roll along, and maybe not as transparently as it once was. But I don't think it changes anything.
There was a Dave Chappelle skit where he talks about, like, he stands in front of the White House and says, "Oh, well, you don't have an army. Shut the F up." Right? You should Google it. It's hilarious. It popped up in one of my feeds the other day, and it reminded me a bit of, like, "Oh, you don't have the gold. Shut the F up." Right? So the U.S. on paper, like based on reporting, is still the largest gold reserve. I haven't checked Fort Knox. I can't comment whether it's still there or not. I have no idea where it's stored, if it exists or not. That's beside the point. We can discuss that in the comments below. But has that changed? Has it changed from army to gold, if that makes sense? Like, to protect yourself? Or is it changing maybe from, like, we have the world's biggest army to we have the world's biggest gold reserve, go home, right?
Well, yeah, I mean, you're right, man. And I just did an interview right before coming on with you with Judy Shelton and her book, Good as Gold. And I asked her about that. I said, why the hell has Fort Knox and the New York Federal Reserve basement not been audited since 1953? Why is Ron Paul always rebuffed when he calls for auditing the gold that belongs to the people? The Federal Reserve is holding it on behalf of the Treasury. It is the people's gold. And I think in order to inspire confidence and trust, absolutely. But what you are seeing is that the rest of the world is looking at gold as an option to hold rather, in my mind, than the U.S. Treasury. The U.S. Treasury, which has been weaponized, can be taken and in fact, using those proceeds potentially to give to a country you're in the midst of a war against, the way that we have done against Russia. We defaulted on $5 billion worth of their U.S. treasuries that we were holding, and we gave the proceeds to the Ukraine. $50 billion worth of European treasuries, the EU took all of the interest and gave that in the form of a loan to the Ukraine, amounts to several billion dollars. The West, I believe, has crossed a line that's very difficult to come back from. Again, the erosion of trust. And so not only that, you look at last year, it was the worst year ever for the 10-year treasury, or the second worst year ever for the 10-year treasury. In fact, where gold had less volatility for the first time in 45 years than the U.S. Treasury did. And this is why Judy Shelton's idea, the whole idea of her book, is to come back to a 50-year treasury that is redeemable in gold at the end of a 50-year period, to inspire confidence. But to her point, and to my question to her, is that in order for this to work, don't we have to show how much gold we truly have? And her answer was yes. And when we look at the rest of the world is not being honest. China, for example, is not being honest about how much gold they have. They've been producing between 300 and 500 metric tons a year as the largest producer in the world, using our trade imbalance to mine gold that it was even uneconomical. They see the big picture. They look out into the future. They don't care what it costs to pull it out of the ground at. Those numbers alone would be far more than we have for years, Kai. I've been doing this for 35 years this February. And forever, people would say to me back in the 90s, yeah, and I'm talking mentors of mine, Jim Sinclair, Richard Russell, people that I would have the good fortune of talking to. And they would say, look, the 1,200 metric tons that never seemed to change way back then, that the Chinese would never update. Well, that's not right. They have way more than they're telling us. It's a strategic decision. And now they're at 2,300 metric tons. So in all of the, or 24, whatever it is, all those years, they've only added 800 metric tons. That's silly. It's not even close. And they're the largest producer in the world. They're the largest importer in the world. They're the second largest producer of silver in the world. They are a net importer, used to be a net exporter. They're buying doré. They're buying concentrate. The countries that they are striking deals with on the Belt Road are all massively resource rich and underdeveloped. But when these countries buy, for example, through a sovereign wealth fund, that's not reported to the IMF. The doré and the concentrate is not 995 pure or 999 pure. That's not reported to the IMF. When the People's Liberation Army buys, and they probably have as much or more than the PBOC, that's not reported to the IMF. And so, why would they be forthright and open about the amount of gold that they have when we aren't? And not only that, when you look at the fact that the BIS reclassified gold as the world's only other tier one reserve asset, and you see all of the central banks accumulated, including those in Europe, and when they saw what happened to the Bundesbank, give us back our gold, well, it only takes 5, 6, 7 years to get it back. I think the lack of trust in our traditional instruments like treasury instruments and the possibility of going back to a system, as Zoltan Pozsar says, Bretton Woods 3, a system that will be about transparency, a la blockchain and commodities, a la gold. Just like Delma Rousseff told us, the unit would be gold back 40% traded on Enbridge and would be deliverable upon demand. Well, it just makes sense that the central banks understand this. Look, you could talk about the rise of cryptocurrencies and Bitcoin, and that could be a strategic asset. Sure, but it ain't going to back a currency system. It has too much volatility. Gold, on the other hand, would be the perfect backing. Even Kristalina Georgieva, the head of the IMF, said a central bank digital currency not pegged to something is fiat. Well, what else are they going to peg it to but what the BIS said is the only other tier one asset? And you go back to the beginning of 23, the report that came out of the IMF saying gold as an international reserve currency, a barbarous relic, no more, question mark. You put all of the things together, even look at the European central banks in your neck of the woods. All of them have been accumulating gold, and look at the way that the gold relation to their GDP is level across the entire European Union. It's if they're all preparing for some form of a gold revaluation, some form of a new system tied to gold. So these countries, it would be in their best interest to not say, this is how much we have. And I find it, there's a fine line between conspiracy and reality, Kai. And you look at this new supposed but unverified massive biggest gold discovery ever found ever in China. Well, what better way for them in a year or two, when this were to happen, to say, yes, we've told you this is all we have, but this gold find, we were able to extract so much gold that, and you mentioned Alasdair Macleod. 2 years ago, Alasdair said the Chinese had 38,000 metric tons in his estimation, 20 by the state and 18 by the people. What better way to say, actually, we have 45,000 metric tons, not the 26 that we told you, because this gold find, well, it was huge. Well, how would we know? How would anyone know? My point to you is simply this. Do not trust what they're saying as it relates to gold, because we're playing the same game. No one knows how much gold we have, if we even have it any longer. And if indeed we are moving to a system that is tied to the stability of gold, as Judy Shelton says, is the only way to reestablish trust. Now, hers is not quite the gold standard as it once was, the classic gold standard, but tying a 50-year treasury to gold, which would be the first pathway to reestablishing trust with the United States monetary policy. Same thing is true with global monetary policy. And if that's where they think it's all going, it doesn't do them any good, not only to tell everyone how much gold they have, but to keep their mouth shut in terms of how much through proxy banks and sovereign wealth funds that they are draining from the COMEX and from the LBMA, using the stupidity of the Western banks that continue to suppress the price. And look at the drawdown in supply. We're just playing right into the hands of these countries. So it doesn't do any good to say how much they're accumulating or how much they have if the ultimate goal is to reintroduce this asset into the backing of a new monetary system. And I think ultimately that is where it will go to some degree. And maybe what the BIS did put a little bit of a damper. But remember, this is Chinese technology. They're going to continue to move forward with this, and they're going to settle in local currencies, and they are going to offset any difference on a net basis with gold until they get a new system. I think the whole thing is moving in that direction. And anyone that would hold treasuries that aren't gold backed of any duration right now in a country that has signaled inflation over austerity forever is foolish, especially when it can be weaponized. And that is what led to this whole group of the BRICS and the whole idea of using a gold-backed currency instead of a dollar, which is losing value precipitously every day and can be weaponized against you if we don't agree with what you're doing.
No, 100%. It's really interesting what's going on. That gold find in China, by the way, very controversial because it doesn't even make a dent in the global gold mine supply market. Like, it won't make a difference because even if you produce 1 million ounces on a global scale, it's that much. Right. So it won't influence the price. Maybe they can classify it as reserves even while it's still in the ground. We all know the shenanigans, especially in mining, that can be played. Along the same topic there, Russia's been announcing that they're buying and are planning to buy silver. We've talked about gold the whole time. Like, what role does silver play moving forward here? Is it being reclassified as a monetary metal? Is it being used as a monetary metal again? Because personally, I think that's what's missing for a silver price move. It is priced as a base metal right now, as an industrial metal. Please don't hate me in the comments below for saying that. It's just fact that I'm stating here. But is Russia's move to buy silver reclassifying silver as a monetary metal again? And is that a chance for it to revalue potentially in 2025?
I think it's a strategic metal, period. And it's not an industrial metal as they want us to believe. I think the real question, Kai, is why are 8 banks holding the largest concentrated short position in any commodity traded on the COMEX market, about 700 plus million ounces? But 8 commercial banks hold what amounts to the largest concentrated short position in any commodity ever traded on COMEX. And why is there a 4 to 6 billion with a B ounce shortfall on the LBMA in naked shorts, meaning they're shorting the price, trying to drive it down with nothing standing behind it but a big checkbook? And that really, to me, is the biggest question. And I've talked about this at length where, you know, the military industrial complex has removed silver from the Silver Institute metrics. And here we are 4 years into a structural supply demand deficit, another 240 or 50 million ounce shortfall again this year, amounting to over 1 billion ounces short in the last 4 to 5 years from supply to demand. And at the same time, why isn't the price rising when India has imported close to 900 million ounces over that same period of time? That's more silver than the entire stockpile is at the LBMA. They say they have 800 million ounces, Kai, of which 500 million purportedly belong to the ETFs. That leaves a 300 million ounce float. The LBMA is trading, by their own admission, 290 million ounces per day, the entire float. But what is interesting is they admit to that number being 10 times understated or more because they only post the final settlement numbers each day, not all of the trades that it took to get there. So in essence, they're saying, well, we're actually trading upwards ends of 3 billion ounces of silver per day, which is 3.5 times annual global mine supply, 10 times the amount of silver they have backing those contracts. And so those commercial banks that are doing this, that are shorting the price of silver, all of them West, are doing so at 90 to 95% naked clip, meaning they don't have the silver behind it, just big checkbooks. And this is why you see a 45-degree angle of the silver that was held at the LBMA now is being drained and has been delivered away. The same thing is happening on COMEX, and the same thing is even happening on the Shanghai Metals Exchange. The metals are being drained. Now, I would say they're doing it very strategically. they are not doing it in a manner that is arousing too much attention. Am I able to share my screen with you by chance?
Yeah, you can. Just under present, and then you can share there.
Let me see if I have what I want to show you even on this computer. I think I do. And yes, I do. So let me share something to you. This is a presentation that I gave at the Rule Conference. So let me go back and share my screen. And so that I can show this to you, share screen. And okay, so we're gonna do this. Bear with me. I just gotta find it, open it up, because this will kind of explain what I'm talking about. Okay, here we go. Oops, wrong one. Can you see that?
Yep, let me add it to the stage. You want to go full screen as well?
Sure. Can I do that? It won't even, this is full screen, I think.
Well, we get the point across. It's not the presentation mode, but we get it.
In fact, I can do this. So I can do this from current slide. Okay. Okay. So in 1942, this was a subcommittee hearing right here, S.2768. And you can Google this, it'll pop right up. But it says the present consumption of silver for war purposes at the rate of about 100 million ounces a year is growing rapidly. According to the War Production Board, it's only a matter of months before war demands will increase sufficiently to require at least 200 million ounces of silver per year. Now, here are the supply-demand numbers coming out of the Silver Institute this year. Industrial, 9%, electric and electronics, 9%, photovoltaic, 20%, that's solar panels, brazing alloys and solders, 9% other industrial, photography, jewelry, silverware. Where is the military? It's gone. And now here is what I was talking about. This is COMEX. The red line.
It's not showing on the screen, by the way, Andy. Sorry to interrupt. We're still on the smoking. It's not showing on the screen. We're still on the smoking gun slide.
Well, that's interesting. Let me.
Because I think we're seeing your presentation, like the actual PowerPoint, not the presentation.
It should be. So let me do this.
Or just get out of the presentation mode. Just change slides here. It works. It works fine.
Hang on. Let me try this again. I'm so sorry, Kai.
But no worries.
It's important to see this because I think it does underscore what's going on. So let me try this again and let me share it one more time. Okay, so I'm going to go back to, can you see that now?
Yeah.
Okay, so here is the supply demand numbers from the Silver Institute. Industrial, electronics, electrical, brazing alloy, other industrial. There is no military information in there. And when you look at this is the right now COMEX. The red line represents the big four commercial banks who hold the largest position, and we can guess who they are. Bank of America, maybe Citibank, JP Morgan, whoever they are. And the green line represents the 8 commercial banks, the big 4 plus 4 more. It's 8 Western banks holding the largest concentrated short position in any commodity traded. And this is what is happening as a result. This is the LBMA numbers. You can see this drawdown. They are using the suppression to draw down the metal held by the West. And I would argue it's because of the military industrial complex. I've given speeches in Vancouver where I'll see you in January, where I've said there's 500 ounces of silver in the tip of a tomahawk. 2 years ago, a man came up to me and said, I work for the DOD. I helped design the tomahawk. I know there's silver in it. I'll let you know. He came back this last year, January, 11 months ago, and he said, I'll be damned. You're right. There is between 13 and 14 kilograms in the cone of every one of these sophisticated missiles. And he showed me all sorts of pictures. But when you realize that in 1942, they needed 200 million ounces a year of silver for war effort. And now the high-tech weaponry is so much more sophisticated, and you need things like silver to make this high-tech weaponry. And we're fighting wars all over the world, often funding or providing weapons to both sides. Why would 8 Western banks be that stupid to hold the price down, Kai, when Russia says it's now part of our strategic stockpile, when India is purchasing 900 million ounces over the last 4 to 5 years, when China, the second largest producer of silver in the world, and they tell David Morgan when he went over there that they're the largest producer, but why are they going to Sean Kuhn from Dolly Varden, he said, yes, this is happening. They're going to South America. 78% of all the silver they're using right now for industrial applications comes from concentrate. They're going right to the miners and saying, give us your sludge, your concentrate, and your doré. We'll pay way more than the West will, and we'll refine it back in China. If they're the second, maybe the first largest producer in the world, why the hell are they doing that? Why are they flying all the way around the world to buy uneconomical silver in the form of concentrate or doré and paying to ship it back home to China, which disintermediates the market and the price? Why would they do that if silver wasn't strategic? It's not that it's an industrial metal that they massively need. That's why they're doing this. It's because they realize silver is far more strategic than we are led on to believe. And ask it another way. Why would 8 banks risk an existential threat to themselves by doing this? And we're playing right into the hands. You see that drawdown. We're playing right into the hands of these countries who know what we are doing. Let me answer it a slightly different way and say the BRICS grain exchange is in development right now. And the gentleman who's running it said, we produce more wheat and consume more than the West does, yet we can't control its price by any metric. It's controlled on COMEX. But when the BRICS grain exchange is up and running, that will change. Now, you could just substitute that thinking with the BRICS precious metals exchange, which is in development. They know what we are doing, that we are controlling and suppressing on paper the price of gold and silver and other commodities, and they are using it against us. Like jiu-jitsu, use your opponent's leverage against us. So it is a massive deal. And that's why I've always been fond of the term logarithmic decay, little by little by little, then bang all at once. Well, that's exactly what you're seeing with the drawdown in the silver inventories and the fight by the Western institutions to suppress its price. But you can only manipulate or suppress price, or manipulate price would be a better way to say it, over an extended period of time, Kai, by pushing it in the direction it's going. And all of the years I've been doing this, no one stood for delivery. It's that backdoor option where, yeah, you can stand for delivery. No one ever did. But these countries are sophisticated, motivated, coordinated, and wealthy as hell. And they know what we're doing, and they're using it against us methodically. People would think because we live in an environment where instant gratification is too slow, we need it to be right now. Well, they're like, no. We can't just throw $5 trillion at the market and buy everything because it will be over just like that. But instead, we'll play the game with them, and we'll just continue to slowly stand for delivery, go around the country and use proxy banks around the world, use proxy banks, or use the PLA to do it, or buy through sovereign wealth funds, or quietly stand for delivery. Not too much to freak out the exchanges, but just enough so we can bleed them dry, death by 1,000 paper cuts, and you wake up one morning and there is no one stupid enough to offer at these make-believe prices in the West. And just like that, everything switches to Shanghai, to Dubai, to Moscow, to the BRICS exchange, and the price setting will move from the West to the East. It's a long game. And look, I will fully acknowledge silver is enough to drive someone insane because it's very counterintuitive. But this is a battle going on, not only between the industrials and the hedge funds or the manufacturers and the investors, but also between the East and the West. And I think it is the Achilles heel to the entire system. Easier said than done to follow that belief, but watch what's happening. Follow the crumbs, and you'll see this is what they're doing. And they're doing it in a very judicial and methodical manner so as to extract maximum amount over a period of time without causing an uproar or a congressional hearing or President Trump to say, no, we need to stop allowing delivery of our critical metals. That hasn't happened yet. And that's why it's happening. It's been happening over 4 years, but in a way that really is slow enough to make even the commentators lose sight of it.
No. And maybe one follow-up question to the whole topic here. Like, do you see a tipping point where this might actually, like, at some point, okay, this is just gonna switch over? Like, all of a sudden the waterfall does happen. Like, so far it's just been, as you said, a steady stream, maybe not the biggest stream, it's not Niagara Falls yet, right? But a slow trickle, little by little, as you say. Like, where's the tipping point, or do you see one? What
tipping point would be a failure to deliver, a force majeure. And that's why they've done it slow enough to not allow that tipping point to happen, because they want to accumulate as much as they can. but it would be one of these commercial banks that are massively naked short. And naked short meaning if you're called for delivery, when you short a contract, the other side is long, and one of their options is delivery. Now, most of my career, Kai, less than 1% stood for delivery. And now you have these sovereign nations and sovereign wealth funds that say, well, we're going to stand for delivery, thank you. And if you don't have that metal, then all of a sudden it's a failure to deliver, or you have to go into the open market and buy it. And if it's a massive amount, not only does it push the price up, it makes all of these other short positions, these other 8 banks have to cover. And maybe it's one of the banks saying, I'm out, you guys, we played this game too long. It's self-preservation, every man for himself, I'm out. They cover their position, the price goes way up, it creates havoc. But this is what happens when you mess with Mother Nature. To me, the tipping point, and maybe a little bit, that's why you're seeing Warren Buffett minimize his exposure to Bank of America. God bless Ted Butler and rest his soul. He passed away, but he was the foremost expert on what's happening on COMEX. And he said, look, Bank of America last year had 1 billion ounces short in physical silver naked and about 40 million ounces short in gold. What if Bank of America failed to deliver? That is the same thing as a default. That's the tipping point. That's when everyone rushes. That's when the exchanges are viewed the same way a Ponzi scheme is viewed, a fractional system. Bernie Madoff had a great reputation until people stood for delivery. Give us our money. Well, that's a problem. And the same thing would be true about the COMEX and the LBMA. Everyone's fine with them, even though, like on the LBMA, they have 300 million ounces backing 3 billion ounces in daily trades. Is there a problem there? I think there is. And the same thing could be said about COMEX, where silver is rehypothecated almost 2,000%, meaning for every 20 contracts, one, in theory, could get their silver. The other 19 would be cash settled. And that's a big problem. That is a fraud, and a fraud that the East understands and have been using it against us to slowly drain those exchanges. So we're not there yet, but that all at once moment would happen, and it would happen very, very quickly, where what you speak of would be all at once. I don't know what the tipping point is or where it's at, but I would say it would have something to do with a failure to deliver by one of these Western institutions.
No, I appreciate that, Andy. Thanks so much for clarifying and maybe jumping down that rabbit hole with me. Another factor in 2025 could be inflation for higher gold and silver prices. In particular, we talked about tariffs. Even Jerome Powell acknowledged that the Fed is now even looking at potential policy scenarios next year when they look at their interest rates and the interest rate environment, which I thought was a bit of a surprise because they always said, well, we're data dependent, meaning we look at unemployment numbers and we look at the hard inflation number that is being reported. Whether right or wrong, we can, again, that's a topic for debate. How much do you factor policy into your calculations, and like how much do you factor in like inflation? Like what are your expectations there for 2025?
I think there'll be much higher inflation. You know, the inflation numbers came back at an annual rate of about 3.4% recently, and we can debate all day long the CPI. Did I say that? I mean the CPI. From the BS, I mean the BLS. I mean, so the point of it is that the numbers that come out from both unemployment and inflation are a complete and total lie. But let's just take that 3.4% at face value. They strive for a 2% inflation rate. And that was one of the questions I asked Judy Schectman. Who the hell came up with that number and why? Because wouldn't zero inflation be a higher standard of living than 2% inflation? In 10 years, that's 20%. You know, my father told me, as a side note, when he graduated college in 1963, that his first job was $6,500 a year, and he and my mother could live comfortably on $6,500 a year. The first Corvette he bought in the mid 70s was $6,000 for a brand new 1973 Stingray Corvette. Now they're $120,000. Point of it is that they're 65% away from where they want to be, their target rate. And they are now pouring gasoline on the fire by lowering the federal funds rate again yesterday by 25 basis points. So they've lowered it by 100 basis points over the last 3 meetings. What's the 10-year Treasury doing? Well, that's going the other way, saying, no. We aren't holding anything of any duration if you're going to inflate, because here we are 65% away from their target rate, lowering rates, rekindling inflation By dropping rates, they're not signaling victory over inflation. They're waving the white flag on inflation. And you talk about potential tariffs, that signals price inflation, no question about it, price inflation. But all of the policies of a weaker dollar and low interest rates are inflationary. They speak to loss of purchasing power. And I think the only way to continue this charade, look, if we took Trump at face value, Kai, and he wants to bring things back, onshore manufacturing, just the cost of labor, the cost of retooling all of the manufacturing, which we don't have anymore, and training people is massively deflationary. It would send us into a depression. I think the only way to get to that point, kind of like the Shawshank Redemption, where you got to crawl through 2 miles of crap to get to the other end, is the debt. And it is the only way to deal with that debt would be first to continue to inflate it away before we start to impose austerity, before we start to make the tough decisions to bring back our manufacturing, to do all of these things, to make this country great again. As Trump talks about, you have to deal with the debt. You have to deal with the realization that if we did all of those things, it would create a depression just like that. And so I think they will continue to inflate away the debt. They will continue to use inflation. And at some point, maybe he comes back after 6-8 months and says, look, we've done our part. We've slashed $2 trillion from the budget, which would still leave, by the way, even with Doge's aspirations, over $1 trillion deficit. So he comes in at almost a $37 trillion debt and leaves with a 41 or 2. It doesn't solve the problem. And he'd say, look, this is a much bigger problem, and it's our patriotic duty. We've made government much smaller. We're going to continue to fight the good fight. But in order to make this country great again and bring back our manufacturing and make this country the engine of growth, we have to all suffer, and we have to all pay a price to get to that other side. And so it's your American duty, your patriotic duty, and maybe his cabinet can bring this country a little closer together in terms of unity, where it's not just focused on Trump, but his cabinet, who I think is fantastic on many levels and could inspire confidence. Look, no matter what we say, I am thrilled that he's in office, because we have become so ununified, and we have lived through bizarro world, through all of the craziness. And I don't have to rehash all of the craziness we've seen over the last several years, but that's a step in the right direction. But to get to the other side, to get to a place where the debt to GDP number we have right now at 123 to 1 doesn't even take into account the Medicare, Medicaid, Social Security, and government military pensions of $165 trillion. We are broke, we are insolvent, and there is no way to get to the other side without dealing with the debt. And I think they will always choose inflation, even alongside the tough decisions. So what would that look like? It could look like stagflation, God forbid hyperstagflation, where the Great Depression meets the printing press. But I do think inflation is here to stay, and I think their policies are highly inflationary. Just the very fact of signaling we want a low dollar and low interest rates, that signals loss of purchasing power. This is inflationary. So yes, I would say inflation is not going away, and the statistics by which the BLS measures inflation by is fugazi, for lack of a better definition. And you just talk to John Williams of Shadow Stats, he'll tell you to put an 8 in front of the 3.5 and at a +8. You're closer to 12% inflation than you are to the number that they're saying of 3.4. And that 3.4 is 60% away from what they're striving for. So yes, inflation is here to stay. And I think it's just getting started, unfortunately, but it is probably the lesser of two evils.
Yeah. Adding 100% tariff on BRICS goods that are being imported will make the dollar store the $2 store, or it's $1.50 anyway already. So make it a $3 store, right?
Because tariffs protect manufacturing. What manufacturing is he trying to protect by saying that? He's not. He's imposing a tariff and he's threatening. It's financial warfare.
Yeah. Andy, I'm trying to get a sense of the consumer. And what better way to ask the owner of a bullion store to get a sense of sentiment of the consumer? Like, Andy, how was business in 2024? What are your expectations for 2025? What's the end buyer actually thinking right now? How much are you buying actually from the consumer? How much are you buying back? How much are you selling? What does it look like right now?
Well, I mean, first and foremost, it was a good year, nothing like the year before. But let me back it up and say, let's think about what the consumer might do. I mean, right now you have corporate executives calling a top, in my opinion, where every inside buying transaction is now offset by 6 insider selling transactions. It's a 6-to-1 selling to buying right now. Bezos just sold $12.5 billion, another $1.25 billion worth of Amazon in November. 12.5 this year. Zuckerberg just sold another $153 million worth of Meta. He's up to $2.4 billion, almost $2 billion in insider stock sold through NVIDIA. And now you have, as corporate execs are cashing out, 46% of U.S. investors see a 10% less chance of a market crash. That's the highest exuberance we've seen since 2006 or before. My point to you is that this is a risk-on environment right now. Gold and silver are taking a breather. They are not in focus at things like Bitcoin, things like Apple, things like NVIDIA, things that are risk on and quite frankly have been for the better part of 2024. And it started with NVIDIA and Apple and Bitcoin. That was certainly the trend. And now this exuberance that Trump is bringing on, and you can call it rational or not, is heightening that. But yet you see the insiders saying, well, we will exit, call it the Irish goodbye, as the streamers and the confetti are flowing and the champagne is pouring and the dopamine rushed consumer who's addicted to these fast returns are partying like it's 1999 and it'll go on forever. But the insiders say, shh, let's go out that way when everyone's partying. That to me makes me nervous. I think we will see gold and silver take center stage again because the central bankers are doubling down their efforts. If you look just over the last couple of months, and let me see if I can find the number here, just since I think it was the month of October, bear with me, I know I have it here somewhere. I want to say, darn it, I should have opened this up. I'm doing this without any notes, so just give me 1 second. I'll find it. Right now, the central bankers have been buying. Give me 1 second. I'm sorry. Here we go. No, that's not it either. Crap. Well, the central bankers have doubled down on their gold purchasing. And in fact, it has ramped up to, I want to say, I can't even believe I can't find this. I'm so sorry, Kai. They have way up their gold purchasing over the last couple of months. And crud. Look, as the central bankers are buying it off the charts, it's being unnoticed by the public. And that's not a good thing. And I think it portrays much higher prices down the road for the public. By the time they finally jump into it, I think you'll see the resumption of the metals market continue to move. And I'm still looking for it. I'm so sorry that I can't find it. But the bottom line is their numbers have gone way up again. And it's like a several-fold increase over the year-over-year average just in the month of November. So look, the central banks, who are the most well-informed traders in the world, they haven't stopped buying. In fact, they've doubled down their efforts. And I think that's what I would focus on more than anything. So we haven't begun to see the end of the metals bull run. This is just a little bit of a breather that is on the backs of this risk-on trade. And I will find this as I continue to answer your questions, and I'll jump back.
I was actually going to ask you now about your YouTube channel, Andy. We need to put a bow around it. We're already at the 53-minute mark here. You launched, or you actually, like on the Minds Franklin channel, you're hosting interviews now. Tell us a bit more about your YouTube channel and what's the strategy, what's the plan, and what's the goal?
Well, I appreciate you saying that, brother. Yeah, it's called Little by Little, ironically. It's to interview people and get to know the people that I've been interviewed by, but get to know who they are and what makes them tick. And a little bit differently than traditional interviews that are focused specifically on the data and the facts, but more about how they came to these conclusions and what makes them tick and why are they saying these things. And it's been a lot of fun. I've had some great guests on. I have some great more coming. I did Nomi Prince yesterday, Judy Shelton this morning. I've done G. Edward Griffin. I've done James Turk, Chris Powell. I have Robert Kiyosaki coming on. All sorts of really, really, really great names. And heck, maybe I can even interview you while we're in Vancouver at Jay Martin's Resource Investment Conference, Vancouver Resource Investment Conference. One of the best I've ever attended, and I wouldn't miss it. But it's just my way of kind of taking the other side of your side of the microphone, and I enjoy it. It's a lot harder. I give you respect a lot. It's a lot harder, I think, to prepare for talking to someone and understanding their viewpoint than it is being married to your own. So I appreciate you saying that it is little by little on YouTube.
Fantastic. No, Andy, really appreciate your time. As always, it's great. Always great to pick your brain, get the latest. Appreciate the update on Project Enbridge and what's been going on there. It's been a big topic of our conversation the last 12 months. So appreciate that update. And I'm looking forward to seeing you on January 20th. We'll do our interview on Inauguration Day. So maybe we'll have the live TV going behind us or something. That should be interesting. So
I look forward to that. And when I see you, I'll have those numbers on just how much more the central banks have been buying. But trust me, since October, they've revamped up. I think it was another 60 tons plus just this month. So they're continuing their efforts. Okay. Thanks for having me, Kai. I wish
great to see you
and everyone else out there not only happy holidays, but a very happy, healthy new year. I look forward to chatting with you soon, brother. Thanks.
Merry Christmas, Andy. Really appreciate it. And everybody else, thank you so much for tuning in. I hope you found this as educational and informational as I have. If you like this conversation, please hit that like and subscribe button. Helps us out tremendously. And it is free. I keep saying it. It's a free way to support our channel. You don't have to send us any money. Just hit that like and subscribe button. And even better, leave a comment as well. We do appreciate it. Looking forward to catching up with Andy in January. If you have any questions for us to discuss at the Vancouver Resource Investment Conference, please put those in the comments down below as well. If you watched our interview from July, we've started off our conversation by just asking audience questions, which is a really interesting and engaging way to start a conversation, and I love that. So I often read the comments, and I shouldn't read all of the comments, but I read every single comment, and there's some gems in there, some really good stuff. So please keep it coming. Thank you so much for tuning in. Thanks so much for watching. Merry Christmas and all the best for 2025. Thank you.